So company final account, once again I'm repeating, students cannot leave any single chapter in the option. That I will explain you why. When I will explain you paper pattern, that time I will explain you why you cannot leave any chapter in the option. Okay. Now I'm moving towards company final account. Easiest chapter is company final account. Easiest chapter is company final account, but this chapter is lengthy chapter because you have to prepare your notes to accounts, you have to prepare your statements, and then you have to write all the items. So company final account maximum should you have to give only 40 minutes, 40 to 50 minutes. So what I will suggest, buyback of shares, give 10 to 20 minutes, you have 3 hours paper. So buyback of shares give maximum 10 to 25 minutes, not more than that, because working note will give you working note you can prepare in 2 to 3 minutes. Journal entries only
This
5 to 6 journal entries are. Hello,
will be first chapter, right?
sorry, can you please repeat?
This will, I'm asking like this is the first chapter in our book, right?
I guess so. I'm not
Yeah,
going, I'm not
prepare.
following any
Yes,
number of
ma'am.
chapters. I'm not
Okay, okay,
following
Yes,
any
sure,
ma'am.
sure.
number,
First
I'm
chapter.
just going what is important one by one. Okay.
Okay, sure, sure, sure. No problem. Sorry.
Yeah, so can I continue?
Yes, ma'am.
Yes.
Final account is easiest chapter. All your past years concept, all your past year concepts are same year. There is, see, no one can change any concept because these are given by the ICI. The accounting standards are same everywhere. The only thing is writing way can be different here. Writing way can be different here. The way mother we can call by many names. Mummy, I, mama, amma, Ammi, Ba. It's a different names to one person only we have given. Same way, debtors you have to write here as a trade receivables. So company final account, all the fundas are same, concepts are the same, but the only difference is that their format is different. Maybe somewhere they have given different names. So that names you have to remember properly. So all other things are same. Like giving if they have asked that purchase of assets is wrongly added in the purchase of goods, so obviously you have to remove it from the purchase of goods and you have to add back it to the purchase of fixed assets. Okay, so this journal entries, these effects are going to be same. RDD effects are going to be same. Bad debts effects are going to be same. But what is important here is to follow the schedule 3 format. Okay, so I'm moving towards schedule 3 format. Contingent liability you always write at the end of the notes or notes to accounts. Last may you will write if there is any dispute. Suppose any proposed dividends are there, this is kind of footnote. So this you will always write at the end of the notes to accounts. So assume that you are having 15 notes to accounts, so 16th will be contingent liability. So always you will mention at the end of the notes to accounts. Okay, so generally it is disputed liabilities, proposed dividend, a bill discounted with the bank, any unclaimed amount of shares, anything, something. Contingent liabilities means it may occur, it may not occur in the future. You are not sure about this, whether it is your liability or not. So that is contingent liability. Okay. Hidden adjustments, wherever percentage amount is given, like 10% debentures or 10% investments. So always you have to see whether outstanding interest is there or not, how much. Assume 20,000 is the interest given already in the trial balance, and still 10,000 interest is supposed to be given. So that 10,000 interest, outstanding interest, you have to add. So all adjustments will have two effects. All trial balance items will have one effect. This concept is not going to get changed. Just 1 second, give me 1 minute. Uh, uh, I need to share schedule 3 format. Just give me 1 minute.